All right, here we are back with another episode of Strategically Held. We got Mark Hall over there, and I generally like to surprise him with the topics. And this one's so big that I think we're going to have to sign you up for a three-part podcast on this one.
All right.
So if you're ready, here's the topic, man. The looming debt time bomb. This system is under pressure. Here's the meaty part of this. This debt is supposed to be 50 trillion by the year 2030. You know, we our forecast for Bitcoin had Bitcoin 290K per unit of Bitcoin that same year. So I figured it'd be worth covering this topic and why the debt is getting so big and what our government can do to try to stop it. But I think there's a lot of challenges ahead. So are we going to dive into this or what?
Let's do it. I'll maybe kickstart some of the responses to the questions you just teed up by saying it really comes down to irresponsibility, right? Like our government, pure and simple, this is party agnostic, right? Both sides,
That's right.
No matter who's in the White House, no matter who's in Congress, you're seeing fiscal irresponsibility. And that's, as we know very well, that's why Bitcoin really gained its momentum and popularity over the last, 17, 18 years. And the reason folks recognize government printing is it's a symptom of a lack of accountability, right? It's short-term thinking, politicians saying, I need to fulfill my constituency promises in the short term. So we'll print what it takes to give certain programs to enable other countries to get what they need, and we'll kick the can down the road. And here we are on the verge of, a number that's so astronomical. And as I understand it, the interest is at a point that we can't keep up anymore, right? It's 120% GDP. And it's amazing. So it's a great topic. I'm glad you posed it. Lots of thoughts, questions for you as well, and reactions, but it's sad. And I think there's a lot of reasons behind it, but I don't frankly see a way out.
Yeah. How did we get here? Maybe it's a real quick recap on that. Maybe something that most people can look back in the nearest term of history on. And I'm going to tell everybody I'm not an economist here, but just kind of looking back at what it was. And I was a victim of this myself. We looked at, 2005, right? Back when, the housing crisis started to develop. It was kind of the cracks in the underling. And that was under politicians saying that everybody should own a home. And that is awesome, right? We do believe in that, but you kind of got to work for it. Right. And so no doc loans were issued. It was policy that came through the government that allowed a loosening of financial products and the oversight where you didn't have to provide documentation of your income in order to get a loan or a second loan or a third loan or a fourth loan. And those loans built up in the system and eventually couldn't be paid off. And, 2008, 2009, big pullback in the market. And that was what was the creation of Bitcoin. That was the impetus. I mean, we might as well bring it up right here and right now is, just not only our government and making things looser and trying to make people happy and almost giving away stuff, it also broke the financial system. So, here we go. Politicians, they run on favors, it almost seems, right? Like, hey, you do this, I'm going to get this money and we're going to help people out with this, that, and that. And we just can't cut that back. So here we are today. The debt goes up by $6 billion a day.
It's so absurd.
Sorry to break that to you. That's pretty blunt, right? So that just, you look at spending and what's going on. And a lot of that is that interest payment that you're saying, because that's compounding on what this is. And so this has got to come down somehow or get inflated away, ignored. The way I see it is there's four ways our government's going to handle this. And some of it's looking at past events. And the first one is cut spending and raise taxes. No?
Yeah, we all know that it's impossible for them to cut spending because that requires, taking away something from someone. And once entitlements go out, it's impossible to reel them back. Taxes is never favorable to, a voting bloc. So if you're planning to run in the next election, you're going to tell people vote for me, even though I raise taxes, much harder. So on that one, I'll probably say less likely.
We have an example of it. California. Yep. Look at the people moving away. Mark Zuckerberg now to Florida, right? Like, I mean, the list goes on prior to him. Ken Griffin, Citadel, Florida, right? You're looking at it going, all right, you're going to tax me. I'm going to move. Businesses are just they're just more savvy to what's going on, and people are going to move around and try to avoid this. But you try to impose taxes, it's a bigger problem. Entitlement spending. So yeah, I agree with you. We might see a trickle up a little bit though in taxes, right? Over time, a slow, minor increase, which ends up being a bigger number down the road and more painful. It also leads to why you got to be invested. You got to be better with your money, but cutting spending. Doge, Elon, he got in there. He wanted to be a hero. Give the guy a lot of credit for trying to look.
Yeah.
But he realized that there's just a lot of humans in the way and you can't do anything about that. And where's Doge now, right? What's going on at Doge? I'd like to hear. Definitely not the coin, by the way. Let's not get people excited there, because if Elon comes back and says, we're firing up Doge again, we don't want to see the Dogecoin on a 30% ripper. Nothing to do with each other. All right. Number 2. Well, we can default on the debt. No, 0 for 2.
Yeah.
2 head shakes.
Yeah. I think for people who've studied history and monetary policy and like what is the byproduct of defaulting, right? You can do it, but it comes with a level of austerity that most Americans are too comfortable for. Wouldn't allow happen, because I think the electorate just wouldn't have the appetite for it. Right? There is something to be said about a logical transition to a better sound money. We could talk about that later, but I don't anticipate that being a reasonable choice. Although, I think it probably is one of the more rational options out there. I don't think it's going to be really on the table.
Yeah, it's tough. You look at countries like Argentina and what they've done. I can't say, I've never lived there, so I don't know what that's like. You just see headlines, and are the headlines skewed to what we want to see here? Because I mean, that could be totally possible too, to the reports that we would see in a future of that. We saw our government go and support Japan recently, and their currency, and why, and it's something that I think hasn't been done in 15 years, something like that. Yeah, and why, right? Do you want to dabble on that a little bit?
Yeah, and quick disclaimer, like you highlighted at the beginning, I'm no macroeconomist either, but based on the little I know, it really was us giving a lifeline to ourselves, less Japan, right? The recognition that Japan buys so much of U.S. Treasuries that we can't afford to have them go through a crisis at a larger scale than they're dealing with. So really, we're trying to bail ourselves out. I think as of the time of this recording, though, as I understand it, we've already seen a decent portion to the tune of 50% really go to waste in terms of the market turn in a way that's against everything we invested toward Japan. So it's unfortunate, right, that we throw a lot of darts at the board and nothing's really sticking. But it's a byproduct of how far globally, right, we're all interconnected, how far we've come. When a few trains get off the rail, it gets bad really quick.
I'm glad you point that out. Like we're bringing it up again. We're not economists. I think for a lot of viewers, though, us saying it from our standpoint on a more basic level, the way that we interpret it is relatable and something they can understand better on their end. What I read, sold euros, bought Japan, bought yen. Okay. But then what I read after was, this was kind of a signal to other institutions and pensions in Japan that there's some worry there that we didn't support what they hold, and they may hit the open market and sell those. Okay, what happens over here? Like, why do we care about talking about this? Well, if you sell those treasuries, it pushes the interest rates higher. And here we are. If people looking to buy a home, the 30-year mortgage it just keeps going up, And even if the Fed does a cut, there's only so much that it could do to bring mortgage rates back down. And so it's kind of a punishment for saving cash right here in where we are. And so you look at it and you go, oh my God, the interest rate's really high. Why is this? This doesn't make sense, you know? And then maybe we do see a rate cut or a rate hike. The Fed seems to be losing a bit of control of what they can claim for rates out in front, 10-year, 30-year, based on these moves that are going on. But the fact that our government took action in this way quickly, and by the way, this only like moved up the value of their currency, I think like 2.4 or 2.8%. It wasn't even like, and then I think it might have retraced, you know, I haven't looked at the chart recently, but like it was only a small move on a lot of capital invested in it. And it feels like now, back in the day, all right, what's the Fed going to do with interest rates? That was the whole thing. Interest rates lower, that means more liquidity, everything's going to go up. But now there's so many sophisticated tools that our government has in different departments that I think it's going to be really hard. And I'm going to go into this some more about like inflation and stuff, like in numbers. I think it's going to be really hard going into the future to really grasp actions that our government is taking and the data that they're going to put out. Yeah. Like, what are these departments? Where did the money, who's holding the euros? Who gave them the approval to sell that? Like, where did that all come from? Like just overnight, somebody decided, let's do this. Who's that guy?
Yeah.
What data did he use? What metrics? You know, with cryptocurrency, that's the beauty of the blockchain. Decentralized, autonomous organizations, you see everything, you vote, you know what's going on in the data. But if then, you know, somebody comes out and says, okay, this is what we're seeing, this is what we did it, this is the data points that we did it. Okay, what's the inputs for those datas? Who made that up, right? Like, is it old data, right? Like, comes back to the inflation numbers. And I think that's going to be a big part of probably our next pod is really the numbers. Where are the numbers? Why are the numbers? What does it matter with the numbers so much, and what you can do to really just take matters into your own hands? Because I think it's just going to be, look here. Meanwhile, this hand's doing different work over here on this end.
Love what you're saying, because you're exactly right. And I think that the through line to all those points is lack of transparency, a bunch of terminology and tools that the public, the average citizen, average investor, average, human really has no insight into. And they have all these different tools, right? And the more you dive deeper into it, you learn, well, how does this, the commercial bank relationship, overnight repos, like all these different things that each have a slight lever that moves things forward incrementally. And you have to ask yourself, what's it all for? And the more time I spend in this space, the more you realize that each of these layers of complexity likely do more harm than good because they create dependencies and all these things. So you're right, lack of transparency. And I think what's great about the space that we love and things like Bitcoin is that it really creates transparency in a way that is immutable and it's clear. And ultimately, it creates the right incentive structure, right? Where with the current system we have, and I challenge folks who are listening, probably have no idea what the Federal Reserve is and chairman and some of these FOMC meetings, and it shouldn't matter. But the point is, back in, was it 1913, whenever we got stood up, that's when things started changing, because you have individuals who are setting rates, you're right, based on data points that are highly debatable, very unique and custom depending on where you live, what kind of consumer you are, but yet the decisions they make impact everything that we all do. And it shouldn't be like that, right? It should be far more of a fair system. And that's why I think both of us are big proponents around sound money, right? It's just important for us to create, or at least get closer in an ideal world, to a system that is based on sound money. So you bring up awesome points, and I think you're spot on.
So there's two more. I think we're only going to get to one, and we'll tease the fourth one here at the end and cover that in the next one. But I've heard of rumblings of we're going to grow our way out of it with innovation in AI. I did a light search, and I couldn't find any time period where in the Industrial Revolution, a technological advancement allowed us to grow so fast that we grew out of something, right? If somebody says, the invention of the car or the railroad and stuff like that. Like when we look back in the time frames, it seems to be pretty associated. Again, we're not economists, with some other financial measures
Sure.
that happened around the same time that really amplified it. But have you heard the rumblings that AI is going to grow us out of this debt?
Yeah, this is one of those what I can't shake my head no and say this is not going to happen, because I think there's an
Oh,
open question mark. And here's why. Again, people much smarter than me have opined on it, but I look at where we are. Right, AI is growing at a pace in terms of raw technology and capabilities that most of us are really unfamiliar with. Right, the application is following suit. We're seeing the use cases gradually being integrated in how enterprises work, how consumers and retailers work, shop, use, play, all those things. So it's happening. The question is, can it happen the right way without displacing, a large portion of the workforce? And if that does happen, what needs to be true for us to avoid some social unrest, uprising and things of that nature? I think it's an open question mark. I think AI, of all the technologies we've seen historically, has the best chance of providing that growth that you're talking about. But not only does it have to be done responsibly, but it also has to be done in a way that allows a transition, right? When you think of industrial revolution, how that changed your workforce, it created an entirely set of sectors that we didn't know before. Internet, same thing, right? A lot of displacement along the way. AI feels different, so that will be exciting. I'm an optimist by nature, so I am encouraged. I think it's going to provide some unlocks that we haven't seen before. Can it grow us out of the debt we have fast enough where interest doesn't chop our legs off? I don't know. It will be interesting, but at this point, it feels like the only hope we have. What are your thoughts?
Interesting. No, I mean, I like AI, but I don't think it works. Like, show me something tangible where the revenue generated buys down the debt. And where does the revenue come from, and why does it go to our government? Right? Like, I know our government is starting to take positions in some private companies, but those are unrealized gains. If they're there, they will have to realize those gains. And if they become the biggest seller in the room, those gains may not be there. AI. So I listen to AM sports radio. I'm gonna admit it, in a day of podcasts and everything out there.
You're
Uh,
one of the few left.
well, Dan Bongino. Sorry if I'm missing his name. I met him. He's on Rumble. Had dinner with him a couple weeks ago, and we were talking about this because of his platform and his media read. And then I made a joke that I do this and why. Look, my phone's got enough stuff on it already. I need to operate efficiently and take care of our clients, right? Number one here, I need less distractions. I want to be here. I want to be present. I want to be with my family when I'm off. I don't need an app for everything. It's pretty simple. I go in my truck, I'm going somewhere. It's a preset button. I got two of them that I like. And now these guys, they do have their podcast. They are on other channels. It's just that for some reason it comes through on my AM feed better. And why am I not, waiting for a YouTube video? These guys are scheduled to be on air live every day for a set block. It's not pre-recorded. Like we're, like now, right? This is going to come out in a little bit. These guys have, and they were talking in the moment. And if there's something happening in NFL, breaking news, it happens there while you're hearing it, right? And a lot of these guys, to compete with AI and new technology and stuff out there, they've had to get pretty aggressive. Like the guys that are there now, two Joes and I can go into one of the shows. But anyways, where am I going with this? Here's where I'm going. I started to hear ads for Chat GPT on AM radio. Come on, right after the local plumber. And it really made me think going, okay, I know Chat GPT wanted to go public. They wanted $1 trillion valuation. They saw what SpaceX did, but now it's not going to go public. There's rumblings that the valuation may not be there. And to me, AM radio, yeah, I'm that guy, I'm one of the few that listen, but it feels like it's your last reach to try to get as many customers as possible. And what it made me think about even further is for agents that we use, non-client facing stuff, non-private information, just stuff to just make the, our engagement better and to read the market, is that there was like this hockey stick of like, let's build agents for all this stuff. And now it's starting to plateau. Like I'm not thinking of new stuff to be built all the time on it. I'm like, okay, this is where we're at. The capabilities are great. I feel like we're troughing off a bit. And so when I think of it that way, I look at, there's been a big pullback. Intel just sold shares, right? But they were up 170% year over year. But then in June, they had I think like a 27, almost 30% pullback, which was bigger than Bitcoin's pullback, by the way. SpaceX, all-time high, over a month and a half after that, after the shortly going up like that, it was down 50%. So where does the money, like, again, how does the money just take away the debt? I just don't see it. Right. Like that's where I'm at with that one. I'd have to see something more tangible, like a funnel, right? Like money made, money goes here, it pays down the debt. And nobody's laid out a path like that. Maybe I'm thinking of it too simply. So I feel free to comment on that one. And we're here on the little over the 20-minute mark. So what we'll cover next week or next time, if we do it next week, we might do it after that, but is the fourth way. And this has been done in the past, actually. We have a history of the government's done this maneuver, and it worked. But it's interesting the way it worked. And I think the way to leave it with people is, houses used to cost 10 grand back in the day. Now they're way more. That 10 grand purchase is now maybe a few months of mortgage payment. So that has to do directly with number 4. And this might be the way that we go. And we'll pick it up there when we record the next one.
I'm excited to continue the conversation.
Let's go. All right, Mark. Thanks, buddy.
Take care, Bryan. Good seeing you.
This is for educational purposes only, not personalized financial advice. All investments, including crypto, carry risk, including loss of principal, and past performance does not guarantee future results.